Okay, so today we're going to dig into the mortgage roadmap and really what the mortgage process looks like in a little bit more detail so you guys can kind of understand what happens on the other side once you pass your clients along to the lender. Okay, so applying for a mortgage can seem like a pretty lengthy process, and it can be. So especially if you're self-employed or have some sort of situation going on, but it all ultimately breaks down into just 8 steps. The number one step is to identify your best financing resource and make sure that they're not charging any sort of hidden fees or anything. The way that you can really look into what pricing matters when you're comparing lenders is by 3 different things. So number 1, your interest rate. Number 2, how much is it costing you to get that rate? So how many points is that lender charging your client? And oh, we've got someone coming in. And then the third thing is going to be lender credits. So things to look out for: interest rates, points, and that origination or the seller credit, the lender credit, whichever it comes under. So those are 2 things you can kind of pay attention to. The APR is actually an annualized percentage rate of the cost of getting the mortgage. So it's just a percentage that is going to be better comparable. So the reason that APR is required to be disclosed on every single rate that you quote is because it is the tool that you can compare lender A to lender B and say, this one is charging a little bit more to get that interest rate or to get that program, whether it's in fees or rates or points. That is all you're going to see that in the APR. So I just want to show you guys this little video. It kind of talks the overview of the process from the third parties. So let's see if we can get this.
Estate transaction, there are many things to consider. Who you use to buy, finance, close, insure, and protect your investment are some of those decisions. The National Association of Realtors has surveyed and found that consumers prefer an experience where the real estate agent, mortgage consultant, settlement service, and insurance agent all work together. This is called one-stop shopping and can help simplify the home buying process. Your real estate agent serves as the main point of contact throughout the process and is responsible for guiding the purchase or sale of a property on a client's behalf. The mortgage consultant presents financing options and helps buyers understand how much home they can afford. Getting pre-approved before you start shopping for a home can also help you stand apart from other buyers in multi-contract situations. One of the critical pieces of the home buying process is the research of the title to your property. Obtaining clear title safeguards against lawsuits or claims arising from defects related to title. Title professionals not only ensure compliance with the sales contract, but also facilitate the resolution of any title or survey requirements. In addition, they will guide you through your closing, explaining each document and procedure. Protecting your home means securing your future. Insurance agents take care of helping to insure your home while you focus on living in it. These insurance professionals are experts at helping you save money by comparing homeowners' policies from multiple companies to make sure you get the most comprehensive coverage at the best price. Your home is a large investment. Orchestrating all the necessary pieces of a successful real estate transaction takes knowledge, experience, attention to detail, and patience. An integrated real estate service team ensures a successful transaction, making us the right choice in real estate. It's really just that simple. We look forward to serving you today. For more information, contact us at phmloans.com or
And I just saw our insurance professional hop on here, which was just the perfect timing. You guys all know and love Gabby. She is fantastic and one of the best insurance agents I've ever worked with. So we are lucky to partner with her. So once we figure out which lender we're going to go with, which financing is going to be better for us, the lender is going to, well, I am going to check and see what toppings we qualify for. So what do I mean by toppings? So you have an ice cream sundae, you've got your ice cream. What goes better with ice cream than sprinkles and syrup and whipped cream? So we've got these toppings that we can add on to our already programs. So the three that come to mind, one is going to be our Accelerate program, which we will actually talk about here in a little bit. Our Home Ready program, which is our conventional loan that actually just by having a certain amount of income, I believe it's $85,000 or less in Orlando, they can get access to lower interest rates. So every person that applies with me, I'm checking to make sure that they don't qualify for this or they do. And then of course, our first-time home buyer, if I have a first-time home buyer, I'm going to tell them about the benefits of being a first-time home buyer. So once I decide which toppings we can use, I will run their file through whichever underwriting system, DU, which is our desktop underwriter. And that is going to just look over the loan. It's going to look at the income, it's going to look at the credit, and it's going to spit out a calculation. And that is just a calculation of risk of whether or not we think that this buyer would get approved for a mortgage. And then once I figure out which programs we qualify for and which toppings we qualify for, I send those options to the clients and we discuss and compare it to their financial goals and their timeframes. So after that, I am going to, well, this is actually a little bit of a prerequisite to the program choice, but this is going to be pretty much the 5 things that we use to look at a loan and see, is this buyer going to be able to pay this loan back? So number 1, character. So we need to show demonstration of repayment. That is going to be credit scores, capacity. How will you repay that loan? Do you have a job that seems steady enough that we can show the ability to repay? And then we have our collateral, which is our form of security that guarantees the payment. So that is what the bank is taking as collateral to make sure that if that person does not pay their mortgage, the bank would then be able to sell that property. And that's basically your property type. Like, is this a single family home? Is it a condo, a non-warrantable condo that we might not be able to insure? That's what is really important about collateral. Conditions. So the purpose of the loan, is it a primary home? Is it an investment home? And then the capital. So how much skin does this client have in the game? So even if a client looks like on paper they will apply, they'll get approved for this mortgage, there could be a certain risk factor that's popping up on their credit report. Say they missed an installment loan, which is like an auto loan, or they have some sort of eviction on their credit report. That could definitely hurt us, but something that can counteract that is capital. So how much money did they put in there? That's why sometimes we'll say, we can't really get this approved at 3%, but if we raise it to 5%, looks like we'd be fine. So that is that on the 5 things that help us qualify. And then another thing that's going to really determine which program we go with is going to be our down payment. So how much money do they have for a down payment? If they have 20% down for a down payment, then I will do everything in my power to get them in a conventional loan, because having 20% doesn't really help you when you're in an FHA loan, because the mortgage insurance never falls off. So if they have 0% to put down, I'll talk to them about our 0% down FHA program or one of our down payment assistance programs, or the USDA or VA program. And of course, last but not least, credit score. This is going to definitely affect which program we go into. And And as long as we're over 620, they can pretty much qualify for everything at Prosperity. I know some lenders have a minimum of 700 for jumbos. We do not have that. And 580 is our minimum credit score overall. I'm going to check the chat. Looks like there's one there. Perfect. Hi, Gabby. Okay. So we're going to dive into a little bit about the different loans, but not too much. That will really take place in our nuts and bolts or our Mortgage 101 or 102 class. So conventional loans are going to be any loan that's not guaranteed by the government. Our max loan is $647,200. So if they have a purchase price over that, that's totally fine, just so long as our loan amount is under that $647,200 loan amount. FHA loans, like I said, we'll go into a lot more detail about this in our next class, but FHA loans are government-backed loans, so they have access to the lower interest rates. But like I mentioned previously, they do have that monthly mortgage insurance that never falls off of the loan. And on top of that, they also have an upfront mortgage insurance premium that is financed into that loan over the 30 years. So every time you're comparing a conventional loan to an FHA loan, the FHA loan amount is going to be higher because it's going to have that upfront mortgage insurance premium mixed in with the loan amount that you already have. FHA is only primary residences. We do allow non-occupying co-borrowers on this. And actually, I'm going to go back and just talk about our timeframes really quick. So conventional timeframes, 18 for a conforming loan if we have them pre-approved, and 35 for a jumbo. And the jumbos and the government loans are going to be a little bit more. And here's why. We have to send them to the government or the investor for a jumbo to get them approved. So as you can imagine, whenever you get the government involved in anything, it could take a little bit longer. So ideal time frame, 20 to 30 days. If there's a condo, if it is a condo, we are going to need a little bit more time just because that HOA company generally, like I said, another third party takes a little bit longer to get all of the information put together and get all of the responses. VA loans, ideal time frame, 30 plus days. Again, we're going to have to send this one to the government and get them to approve it. So our VA loans are 100% financing up to $1.5 million. So no problem with maximum loan amounts there. There is a first-time funding fee, which is basically the same thing as the FHA mortgage insurance premium. It allows them to get access to the VA loan. And it basically is an insurance policy for VA. If someone doesn't pay their loan, then that premium is going to cover that. If you are a disabled veteran, this is actually going to be waived. We'll get into a little bit more of the property specifics or the program specifics for sellers in a second. So step 3, once we've decided which lender we're going to go with, what program we're going to go with, we're going to go ahead and apply for that loan. And this is actually getting easier and easier every day because we're getting more and more verifications automatically from employment. So these are generally just things that we need if there are little holes. So if we don't get their income validated, we are going to need 2 months of pay stubs and the previous year W-2. If we don't have their assets connected, we will need 2 months of bank statements from the account that they're sourcing for their down payment and closing costs. 1 to 2 years of tax returns for self-employed borrowers. Your driver's license, we need that on every transaction. If you're divorced or separated, we need a divorce decree or a separation agreement. And if you are in the military getting a VA loan, we will need a DD-214. So I know we talk about this a lot, but I just like to bring it up in every class that we do just to make sure it's top of mind for you guys. So the difference between a pre-qualification, a preliminary approval, and a buyer advantage approval. So pre-qualification letter, we are just going to take their information. I generally do a little bit more research on the front end than probably a lot of people, because my reputation is your reputation. I don't want you guys to get in a bind. So I might ask for that additional pay stub to verify any sort of bonus, any sort of tip income. If it's self-employed, I'm going to get those tax returns looked at before I send them a pre-qualification letter. That's why if you have a self-employed borrower and you come to me on the weekend, it's a little bit challenging to get that income looked at, because I do send that to my underwriter. A preliminary approval is where we go to the underwriter and the underwriter gives us a list of conditions, generally a letter of explanation explaining a large deposit, or a letter of explanation regarding a previous address, anything like that. Or if they've sold a prior property, we need the closing disclosure for that. And so that will be your preliminary approval whenever we give you the conditions and we say, okay, well, we know these conditions aren't going to be too terribly bad. And then once we get those conditions back to the underwriter and get fully approved, that is our buyer advantage pre-approval. That is where we can add on that $10,000 guarantee and stand out from the other offers that we're competing against. Step 4, we're pre-approved and we're ready to shop for our home. I know you thought we were shopping for our home like 3 steps ago, but we weren't, because we were still getting pre-approved. So yay, now we know just how high we can go because we have our pre-approval and we are going in the right direction. So step 5, submit your offer, negotiate terms, and then we will begin our final processing. So we're going to look at our property specific documentation at this point. We're looking for title, we're looking for appraisal. We're not looking for inspections. We don't want that. And then our underwriter is going to look at all of this information, compare them to the program guidelines. Some additional conditions may be required for that property. Think condo, manufactured home, that type of thing. Those still could have some additional conditions. Another way that you can get additional conditions after you get through this process when you're here is if it's an FHA loan and the appraisal is subject to anything. Same with the VA. So government loans, they're going to be a little bit more strict on that appraisal. So that might cause a little bit of issues there. Just keep an eye out and make sure that you are on top of that. Step 8, closing. We are going to sign our final closing documents. Every single time we close the loan, if you're using Prosperity, your clients will be emailed the closing disclosure a few days before closing, and then they can actually sign that online the morning of closing. So when they go to the title company or the attorney, they're not having to sign this many papers. They're only having to sign like 6 or so. Of course, they'll still explain it to them and I will still explain it to them. But for those people who are ready to go and not really trying to waste their time, it's a really good option. So if you get any questions about that, that is where that's coming from. Any questions? We kind of got into the nuts and bolts of it. I will just continue on if no one has any questions. All right, so I know you're all thinking, what about my seller? How does this stuff affect my seller? So government loans place additional performance obligations in the seller. That is what I was talking about with the appraisals. The VA sellers pay for the pest inspection. FHA and VA appraisals stick with the property for 120 days. And a little note about FHA. FHA does get a bad rep, but it might not be because they're credit challenged that they decide to use the FHA program. Some people just would rather have the lower interest rate and maybe they're going to pay off the loan sooner. Again, FHA, VA appraisers are going to be more strict than conventional, but it's all opinion based. So you just really never know what you're going to get. But if you have a property that's a little bit tricky and you might not get through inspections, you might want to think about going, or appraisal, you might want to think about going with a conventional loan. So what does Prosperity do for our VA? This is a shameless plug because we have the very best appraisal VA program in all that I've ever seen. So we're waiving that appraisal, no origination fees, and we're going to give them an extra $250 in closing costs on top of that. They do also get a discount on our home inspection through our third-party partner, and I can share that with you guys if you don't have that already. So what goes into an offer? These are just the important bullet points of what really matters when it comes to putting an offer in and getting it accepted. So first of all, having that $10,000 guarantee and having our client fully pre-approved is going to make us look like the shining star next to someone who's just pre-qualified with, I don't know, an online lender or something like that. So the program, this is kind of what we talked about on the last slide, where FHA and VA are kind of not loved on in as much. Although I will argue that VA loans fall apart way less than any other loan that I work with. But of course, a conventional or a jumbo is probably going to be better received than an FHA, VA, or a renovation loan. Seller credits, that's more of like a buyer's market type of thing, but I still see a lot of seller credits on our contracts. So FHA maximum seller contributions 6%, conventional 3%, VA no limit. Earnest money, how much are we putting down in earnest money, and how long will it take to close? This is probably the biggest one, and this is why I harp on getting that buyer advantage so we can come in and offer that really quick turnaround time. This is just talking a little bit about the Prosperity Advantage. And as we know, people being surveyed have said that they like to have a one-stop shop where everyone knows the process seamlessly, a local lender who has an appraisal process put into place where we can really combat any issues, especially with our local processing and underwriting team. I can literally call my underwriters and processors at 10 p.m. and they will answer me. So our local senior leadership, you guys know our fearless leader, Eric Spotswood. He's amazing, and he jumps into any situation that has gone wrong during the mortgage process, always. All right, and why use me as your mortgage consultant? So I'm dedicated to making your clients feel extremely, extremely comfortable with where they're at on their finance. So like I said on the very beginning, I will be happy to sit down with your clients and look at the loan worksheets that we're comparing from lender to lender, make sure there's no hidden fees, make sure there's no crazy points being charged. And I will do that for any of you guys, even if they're not using me. So feel free to just pass my number out and know that I am here to hold their hand throughout the mortgage process, no matter what. I'm here to make you guys look good. I'm available nights and weekends, and my amazing team will absolutely make sure your clients have a fantastic experience. So these are just some of my client reviews. I have them all over my website. If you need them, you can find them in my signature line and my email. This is about our Accelerate process, and I wanted to kind of talk to you guys about this. This is something that we're going to be seeing a lot more because we have improved our single source validation system. That means that more people are going to be getting their income and their assets validated, which means the only thing I need to close is going to be that driver's license. So on Saturday, when your clients are, last minute wanting to go look at this house, they can literally get a pre-approval letter in minutes. So this is going to be really great for people who work at companies who like bigger companies. So if they work at the bank, or if they work with Lowe's or Disney or something like that, they're going to have that income validated because those companies are working with our third-party employment validation system. So like I said, these people apply, they link their bank accounts, and then they get a pre-approval letter. So this is really, really great. And I really encourage you all to discuss this with your clients, especially last minute Saturday, Sunday situations where they might not be able to get in touch with another lender. Yay. All right, and why are we doing this? So we want a seamless process for our clients, right? We don't want them to have to go and dig through their documents to find last year's tax returns. We want to minimize the conditions, eliminate the resubmissions, which makes it extremely quick and efficient. And it just simplifies the process and gives that extraordinary experience, which is our motto. So my success is your success. Thank you so much for learning with me. Let's hit our 30% capture rate goal and show the other offices how strong our partnership is. Do we have any questions? I'm yours for, oh, I'm sorry. I just saw this in the chat. Can the iPhone user, oh.
Hey, Carlin, it's Dory.
I have a question.
Yeah. Was someone trying to ask a question? I can't hear you. You might be muted.
I think Teresa was, Carlin. It's Dory.
Okay. I don't see her on here.
Well, there's a Zoom user and there's an iPhone user. So whoever those are, just put in the chat who you are because I need to know for attendance purposes. Thank you.
Hi, this is Teresa.
Hi.
Hi, I'm attending from my cell phone, so I don't know if my name is appearing, but I have a question. You said that for the expedite process, does it have to be only people who work in large corporations?
No.
Or can it be like people who have their own business as well?
Yeah, that's not going to be automatically validated unless they are like the owner of a very large company. But if it's self-employed income, like I said, we really want to get that looked at by the underwriter and get that calculated before we give a pre-qualification letter. So that will not ever be Accelerate approved.
Okay, got it. But any other company will be not just very large multinationals.
Yep. Mm-hmm.
Thank you.
Yeah, of course.
No,
Carlin, hey, Lorena has a question.
Hi.
Hi, Carlin. Yes, no, I was just asking if this was gonna be mailed to us, the presentation that just did.
Yes, I can absolutely send this to you.
Okay, thank you.
Yeah, and every workshop we do, I've actually figured out how to upload it to YouTube. I think my computer is so incredibly it's like Fort Knox. I can't plug anything into it. I can't do anything. So the only way I could share it was via YouTube. I hope that works for you guys, but I will definitely put this out there and I can send you the presentation as well. And we have so many other good, this is full of all the classes that I'm going to teach you guys this year. And any suggestions are welcomed as well. So any other questions, you guys? The more you hear about mortgages, the easier it's going to get to process it. So I really like to keep these short and sweet and simple because I know mortgages can be kind of boring. So let me know.
I have a quick question. Sorry. You mentioned something. Are they waiving the appraisal or are they doing desktop?
For VA?
For VA? Okay.
No. So we pay for the appraisal.
Oh, you pay for it. Okay.
Yep. Waiving appraisals, that's actually a really good point. We can talk about that for a second. So the only way that I will know if a property is going to be eligible for an inspection waiver is by putting it through my desktop underwriting system. Because the thing that gives a property inspection waiver is where Fannie Mae, our investor, is going to have all of the information, enough information from that neighborhood to make a decision about that value without having someone go out to the specific property. So the less risk, the more people are putting down, the more chance they are of getting that appraisal waiver. And then the more information we have in that neighborhood, the better chance we have for that. So if we have a property in a neighborhood that nothing is sold for like the past 2 years, we're going to have a hard time getting an appraisal waiver for that versus somewhere that has had 10 sales in the last year. See the chat going on. Okay. Any other random questions? Doesn't have to be about this. It can be about anything, any scenarios you guys are dealing with. Well, thanks so much.
Did you just say you're having more waivers or less?
I'm honestly having less waivers than I was getting 2 years ago. I will say that. It definitely gets less and less, but that's because I think there's less sales, less things closing in those neighborhoods, but I still do get them. Probably one in 10, maybe. Where it used to be like 3 in 10.
Carly, how far have you seen the appraisers' values be compared to the sale prices in average?
On average, I don't know about an average. I will say most of them are coming in pretty close. If I had to average it, probably 1 in 8 come in with like a significant variance. But let me tell you guys this. So 2 of these things have happened to me. One was 75,000. One was 50,000. I ordered a second appraisal on both of them, and they both came in at or above value. Once we provided the appraiser with the appropriate information, like, do not let an appraisal happen without you or the listing agent bringing them a packet showing them the things that you used to come up with the value. Like, I had someone tell me that that's not their job, but I really, really highly suggest you guys doing that, because it is a really big difference. Like, every time it comes in under, I'm like, did you guys leave something for the appraiser? And they're like, no. So that's probably the best piece of advice I can give you.
Thank you, Carly. And do the client has to pay for the second appraisal?
Never, never, never.
That's good to know. Thank you so much.
Of course. Great questions.
So usually on the buyer side, it's hard to get to the appraiser. What kind of advice do you give on that? I mean, I had to go through a kind of jumping through hoops to do that, but it worked out great. But
yeah, so I would say be there. So do you guys get notifications via showing times? Okay.
Get notifications of people showing the property, but the appraiser, we just get it from the listing agents when they're coming. But it really isn't, on the buyer side, it really isn't something that we get.
Right. So a lot of times I'll have my listing agent and my buyer's agent working together. That's normally what happens. And then if either one of them will try to be there for the appraisal, to let them in, ask them if they need anything, have any questions. I haven't really heard much about like a listing agent not letting the buyer's agent know, because everybody wants to work towards getting the deal closed. But I can actually reach out to my team. It seems like it would be beneficial once the appraisal is scheduled to have the buyer's agents emailed with their contact information. Do you think?
Yeah, I had to go through a few different methods to get to the appraiser.
Let me see what I can do about that, because
The thing
I
is,
know I can't speak with the appraiser before, but anyone else can.
if
I'm
your buyer has waived any appraisal contingency, that's where the listing agent really doesn't care what it gets appraised at, because
That
the
is a
seller's going to
shame.
get their money. The seller's going to. I mean, I haven't had any problem with the other listing agent, but the bottom line, because I communicate a lot, so there's no problem for me. But I can see why they would not really have any issue with it if their seller's going to get the money no matter what.
Yeah, that's a terrible way to look at it.
Well, that's the way it was. I mean, when I started out, this was not the case to give waive appraisal contingencies. And so back then, I know that all the listing agent worked very hard to get it to the price of the contract.
Yeah. I mean, I don't really know how much those appraisal contingencies could really hold up, though.
What do you mean?
I mean, I don't know, and I'm not a contract person, but I have heard that appraisal contingencies, Dory, correct me if I'm wrong, are
You're talking
not
about-
legally bound.
Are you talking about gap or appraisal rider? So the appraisal rider can become part of the contract. This is what was been used
Okay.
for the past whatever, and it stipulates on it what is the value that they expect it to appraise at. So for example, let's say it's a $300,000 purchase. In the normal world, you would put a $300,000 appraisal price. But on today's world, what some people will do is they'll say, well, we want this house anyway. So they'll put, it has to appraise at 290, and then they'll pay the difference. That's assumed. And we also have appraisal gap language from our attorney that says, if it does not, in a gist, because I can't bring up my mail, but if it doesn't appraise at purchase price, the buyer will pay the difference up to X, either up to 10,000, but not to exceed purchase price, something like that. And some people have been using that.
Okay.
Is
Yeah.
that what you were thinking, Vivian? I'm not sure. I mean, but here's the thing is that then with a loan, with a financed deal, this can be an issue because what the lender has to be aware of that. So that appraisal, whether it's FHA or if it's a regular rider F, that's going to be with your contract. The lender needs to be aware, and then the buyer really should be showing proof of funds that they have the extra funds. The way that I think it would absolutely work in a funded transaction is that perhaps it's a $300,000 property, but they're approved for 400. That's a no-brainer to me. If I'm wrong, Carlin, tell me. But if you're like someone who's really tight and 300 is their limit, and now you're buying a home that's 310, and they say they'll pay the difference, they may not be able to. So I think that may be where there's an issue.
Yeah.
Does that help
Definitely.
clarify?
Yes. Yeah. So, I mean, if they can't ultimately come up with the money, then that's a financing issue and doesn't matter. But yeah, it's a hard environment to be in. So it's important to get creative. I do have a class on how to win in this market that I have not taught you guys yet. I will put that as my first class that I will teach in second quarter. All right. Any other questions? Anything goes. So whatever you've got.
Are
Don't
you
be
and
shy.
Gabby still going to do a lunch and learn? You were talking about maybe doing a lunch and learn the first week of May.
I think so.
think we were
I think
doing
I'm
re-
gonna go ahead.
Oh, go
Gabby.
ahead, Carlin.
I will have an ice cream party that week. So keep an eye out for that invitation. And then Gabby and I think we might do like a little happy hour or a little lunch or something.
Yes. Yeah, that's what I was going to say. I know that we talked about doing maybe like a happy hour, but we can do a lunch. I'm not sure which one's going to work out best. We just want to make sure that we have as many agents come out and, you know, have a good time either during lunch or just a happy hour.
So maybe we can, just a suggestion is maybe make that the day we have a meeting. So that, because the last time we had April 5th for our awards, we had about 25 people. So that was pretty well attended.
Absolutely.
And then
Okay.
there was a question from Charles Collinger. I don't know if you answered it because I had to take a call. I'm sorry. Have you heard of the new Annie Mac Cash for Keys? Cash for Keys used to come out a lot. Are they bringing that back, and can you do it?
I am unaware of what this is, but if it's one of the big investors, I don't see our company not partnering with them. So I'll check it out. Annie Mae?
Charles, was it a Annie Mac? That's what it looks like he wrote.
Annie Mac.
Annie Mac.
Annie.
Yeah, they used to do cash for keys either for a tenant or for a seller to walk out. So
Okay,
don't-
so it's like a buyout?
Basically, the bank's buying the property and then doing a suitable loan with the buyer.
Okay. Hmm.
Interesting for first-time buyers so that they can compete on, against cash deals.
Definitely. Okay.
yeah, and did you see, so just to throw this out there, two agents have brought this to my attention. There's a company called, is it Ribbons or Ribbon? And
Ribbon, yeah.
they're basically like hard money, it sounds like.
Ribbon's actually really a great company. I've met their people. They're good for people who don't have great credit. I don't know about their interest rates because when I heard from them, interest rates were in like the 3s, and I was like, oh, that's not so bad. So I don't know where they're at now, but I love Ribbon. I think it's a great opportunity. And the thing about Ribbon is they're basically renting from that investor until they're able to buy it. And then there's 2 transactions there. One from you and the investor putting that in, and then from the investor to the buyer.
So it's like a Home Partners of America.
Exactly.
Okay. Okay, so it's a little different than what we thought. Okay.
I
That's
have
good.
a
And then,
question, one more, if that's okay. This is Teresa. About down payment assistance programs, what do you think about those? Are they recommendable or not?
So right now in this market, it's a little tough for me to say that that is a super great loan program because the interest rates are so high that the highest interest rate that they can have access to is going to cost them money to get into that rate. So it's definitely challenging right now, but if they have, I mean, it's great for someone who just wouldn't have the opportunity to get into a house any other way, and they have a little bit of extra cash to pay for that introductory rate. But it was a completely different situation 6 months ago.
Okay, got it. Thank you so much.
and I think too, I know the experience I had with because I did a lot of first-time buyers. So some of them, it worked for them and they were getting money from the county and the state, but you have to keep in mind that the Orange County budget expires, I think it's September 30th. So when you get to like July, August, they don't have funds. And then also my buyer was going to use down payment assistance, but it ended up being more expensive. The rate was higher, like kind of like what Carlin's saying. And so she ended up, they had a different program or whatever you want to call it, where she could actually borrow from her 401k and pay it back on a program. And that was actually it was lower interest rate on her main loan. So it was costing her less money to purchase.
That is the best way to do it.
Awesome. Thank you, guys.
Thanks. Thanks for that question. I didn't see any other questions, Carlin. I'm sorry. But do we have any other classes between May and June?
So my ice cream party will the first week of May will have a class.
Oh, okay, cool. Thank you.
Yep. And it's Prosperity has that. And I talk over all of our different programs, all the different avenues we can get your clients pre-approved. And yeah, it's going to be fun. All right, guys. Thank you so much for being here today. Every time I'm going to have a dance party before. So join me early and I will see you guys soon.
Thank you.
Thank you.
Yeah. Bye, guys.
Bye.
Bye, thank you.